Markets have spent the last 1 to 2 months consolidating across the board, US indices, European, and even gold. So instead of collapsing, the price has absorbed pressure, it's built structure, and it's actually returning to the previous high. So this is often how markets prepare for the next phase. In this video, I'll break down how to read the major indices and why this type of structure often precedes large directional moves without guessing or forcing a narrative. And I'll also walk you through the 4 scenarios every trend following trader needs to account for when markets move higher, so you're prepared, to whether momentum accelerates, pauses, or fail. The goal isn't prediction. It's really about clarity, discipline, and having a plan before the market decides for you. So remember to subscribe for more insights like this, and let's dive in. Starting with the analysis of the S&P 500. So this week was actually very interesting. Look at this. We did have, fairly low volatility, right? But look at this. The price just dropped and just came back all the way very close to the open. So that tells us that, there is a very strong supporting buyers. A lot of people are invested in there and want to push the price further up. So our scenario still stands right there, right? And this week really tells us that we might assist as a contraction of volatility actually over the next few weeks, few months, and we might assist as a breakout early 2026, which will be a next phase of this powerful bull market we're on since early 2024, right? So we had a beautiful leg up there since June 2025. Now we're correcting, and we may assist, as I just said, to a next phase early 2026, and I would love to see that, right? So whether it's gonna be throughout Jan, throughout Feb, I don't know, but this is beautiful, right? We might have a cup and handle, and with a very tight handle and a breakout, that's what we'd like to see. So let's monitor that, but definitely, we are still in a raging bull market. We are now consolidating, and we may assist at the end of the consolidation. So should a breakout occur, I will be more aggressive on positions on the US stock market, more aggressive with my risk management. Moving on to NASDAQ. So it's a bit of a similar story, right? As you can see, NASDAQ is more volatile, right? And it's still a little bit lower and not as close as the previous high as the S&P 500. But that scenario is still very much at play, right? So we might see something like this with a price that really is gonna play a bit of tennis close to the upper side of that resistance and then break, right? I think maybe a little bit longer, we'll see, right? But it's possible that in Q1 next year, at some point, we have a breakout. And that'd be awesome, as I said, for us trading stocks, and we can be, again, more aggressive with our risk management. So to be seen, very similar scenario as the S&P 500. And again, this is not prediction. This is just the image I have in my mind, right? This is really, even when I trade stocks, these patterns forms on stocks, these are trends basically that are building up, right? They're going up, they are pausing, consolidating, and then they resume or they fail, right? And here, we are again on a large time frame, on a weekly time frame, and everything is telling us that the trend is still intact, it's healthy, it's pausing, consolidating, and we may assist to another leg up, right? Once this staircase is finishing, is done building, basically. Moving on to the CAC 40, the French index. So there as well, our scenario is still very much intact. This is what we draw for the past few weeks. We had an extraction from this very large base there, right? That really lasted for a year and a half, almost 2 years actually. We had a breakout in September, and now we are consolidating, confirming that breakout above that important key level there. So we are oscillating back and forth. This is very tight, and look at this for the past 4 weeks. Look at how the volatility is contracting, right? The bars, the amplitude of the candle there, of the bars, are getting tighter and tighter. So yeah, it's a bit of a similar story, right? We may assist early next year to a breakout as well on the French index, and yeah, that would be awesome to see. Remains to be seen. So right now we are still building this pattern. I would love to see basically this kind of things similar to the other index. I mean, you know, if some of you have been watching my videos, you know that by now I just love to see that, right? I love to see, you know, you have a breakout, extraction of a large base. It's basically the market which is reversing. So here, I mean, we are continuing the trend, but, you know, assuming like you had the market like dropping down, you want an extraction from a large base, and you want to watch out for the first consolidation. And that consolidation, I want it to be either like a tight base, sideways consolidation, or a cup and handle with a beautiful cup and a tight handle that is really contrasted from the first part of the pattern, which is the cup, right? And yeah, the cup might take, you know, different shapes, a double bottom, triple bottom, but what you want is really, you want to have a clear level respected, like really price is not breaking away, it's like working under that, bouncing back and forth without ever crossing significantly above. And you want the volatility to tighten, to contract before a breakout. That's what I trade. I have a video, by the way, with like the 6 elements of an explosive trade. That's what I trade. If you want to, you know, learn about that, feel free to go and watch it. But yeah, this is my kind of scenario, the scenario I have in my mind for the French index. And yeah, it's very similar to the US index as well. Moving on to DAX, similar story as well. I mean, look again, like the drop in volatility, right? We have literally a pause. It closed almost at the same level that it opened this week. You know, doji price pushed down, but you know, there's a lot of buyers and it was just stuck there, right? So our scenario that I just removed is still very much valid, right? We might see, would love to see something like this and a break, right? So again, similar to what we've been talking about on the other indices. Again, this is not a prediction. This is what I trade and what I have observed. And this is often, you know, the quality moves are often preceded by quality patterns and structures such as these, right? So yeah, explosive move to the upside, legs up and so on, big trends, explosions. They are born from quality structure like this, which translate like the people psychology, right? The operators' psychology on the market. They're accumulating a stock, a crypto, accumulating, right? And then there's all those sellers basically are getting flushed, and more, and which is why you have that contraction, right? And you know, people trying to sell, people trying to buy, but you have less and less sellers, and that's why the price started to contract under key level there, which is a psychological key level which buyers can break through until there is enough force, enough power so that it breaks through, and then you kind of in free air and price has room like to run up, right? So that's what contraction and volatility does. You have a reduction in the oscillation in price. People are coming kind of to an agreement in a very tight zone, and then whomever wins basically usually will get an explosive or like kind of powerful move, right? Up or down, right? This could also go south, but so far, you know, the scenario for the upside is still very much at play. So same thing, let's see in the next few weeks and months. But yeah, we might have a beautiful new leg up on several indices for stocks. Moving on to cryptocurrencies now with Bitcoin, and yeah, Bitcoin is still pausing, right? So as you can see here in our large scenario, we are probably going to have a big range multi-month, which, you know, I wouldn't be surprised if this lasts into the second half of next year. So here we may be drawing a kind of like double bottom there, right? Yeah, and that's all, right? There's nothing much to see really. We haven't at all recovered from this big drop since early October, and it's going to take some time before we kind of flush this out, and if we resume the uptrend. It's not dramatic or critical on Bitcoin for sure, but I mean definitely now it's not. I'm not bullish, right? I need to see what happens over the next few months, and I will need a quality, something really of quality there under that key level, somewhere there, right? Under that key level, and to have a just beautiful there break to maybe consider a position. Analysis of Ethereum, and as you can see, it's a little bit of the same story here on Ethereum. So yeah, I mean there's nothing much to add. We are kind of like bouncing up and down. Maybe we have a level that is being identified right there, and yeah, we need to see, right? We'd like to see basically the price to really work a bit under that break to kind of confirm the break, a bit like we had here, right? Something similar to this. We might get, there's a support area right there. We have a resistance a bit there. So yeah, we need to see what happens over the next few months. And but it's similar to Bitcoin. If Ethereum is to resume its uptrend and go to all-time highs and break the $5,000 barrier, yeah, it would be healthy that it takes several months, and into the second half of next year we have that break and another leg up, right? Before that would be a bit premature and cannot be sustained. So again, corrections are healthy. You can't go in an upward trajectory only. It's not sustainable, right? So it needs to breathe. If it goes too fast, too high, too fast, it's just it's gonna collapse. It's gonna run out of steam. So it is healthy here. Yeah, let's be fair. It was a bit of an extreme and sharp correction, but we can't say the party is not over yet. But I will need to see something like that and a break above that level to confirm that, yeah, okay, we are having another leg up, we are having a next phase of the bull market. Until then, it's ranging, and yeah, I don't take position in such scenarios. Analysis of the XRP. So nothing much to say. We came back down here to test our level, as you can see, right? This level has been kind of worked on once, twice, 3, 4, 5, 6 times, 6, 7 times, right? And yeah, we are not closing below, right? We are still above it, so we might have a turn, something like this, right? That's again, I don't know if that's going to happen, but that's what I'd like to see in order for me to consider taking position, right? And if we zoom out, let's remember that the XRP is in this beautiful pattern there. Actually, I'm going to put it in logarithmic, so yeah, that's much more actually clearer and impressive like that. So the XRP extracted itself from this huge wedge triangle, had a run up, and then is stuck under the all-time high basically right there. So yeah, whether we have a pattern like this or whether we're going to have something actually like this, I don't know, right? But as long as this kind of level is respected, our scenario is still in play. We still have our triangle consolidation that is being formed and built after this massive run up, right? Extraction of this large base triangle. Consolidation, I want to see that to consider a trade, explosive trade, quality trade that I'm going to be able to take some partial profit off quickly to neutralize my risk and bring my stop to break even and beyond. That is how I trade. I really try to neutralize my trade as fast as I can. That is why I wait for I'm very patient. I use larger time frames and I wait for quality setups like that. This is how I trade stocks as well. Moving on to gold. And nothing much to add other than look at this. We just bounced off the previous high here, and we are stuck there. So our consolidation scenario is still at play. Yeah, again, if we form something like this with volatility contracting, and throughout Q1, Q2 next year, we had a beautiful break, I would love to consider, taking position on that. That'd be amazing, right? So let's be patient and let's see. Nothing much to add here. And a bit more on silver now. So precious metals are definitely going up. Looks like, you know, silver is catching up to gold, right? Gold has been pumping hard since 2024, summer 2024, and yeah, silver just like was lagging behind, right? And this year, yeah, massive year for silver, another fourth week in a row with a big upside. So as we touched upon last week, I mean, yeah, you need to have a plan to account for that. You need to have a plan to know when you exit. Are you trailing your stop below each day? Do you have a way to follow the price, right? That's it. Powerful, you know, upward move one direction with big candles, big days, big percent weeks or days is not sustainable. So just be aware of that. Moving on now to the 4 scenarios for trend following. We're going to talk about the 4 scenarios that every trading plan should account for, in my opinion. This is what I use in my trading. This is part of my trading plan. All these 4 are accounted for, and I have a specific plan, specific rules which I follow if I fall into any of these scenarios, right? So the 4 scenarios are a steady uptrend, which is going to be a staircase, right? From a breakout, I trade breakout and I go with the trend. From the extraction of a quality pattern, you know, a healthy, steady uptrend is going to build stairs. It's going to build a staircase, right? Steps. And these steps that I call the up steps are consolidation. They are pause in the uptrend for the price to basically correct a little bit, people to take profit, new buyers coming in. That's healthy and that's sustainable, right? That's not going to be too steep. It's going to be a steady uptrend, beautiful with steps. And I'll show you that. I'm going to show you a case scenario for each of these on actual trade, real trade that I took. The second one is going to be climax run. So that's when the rate at which the trend is going, which is accelerating, right? So, you know, we had a bit of something diagonal like that, sustainable with some corrections, and then suddenly price start to get more vertical. So we need to be more aggressive with how we are managing the trade and how we are trading our stops there. The third scenario is going to be a super climax run. So that's a climax run on steroids. So that thing is getting even more vertical, like almost like completely vertical. That's like exponential move, and that's not going to last. It's going to snap back, and I'll show you a scenario there. And I mean, this never fades, right? Nothing goes to the moon forever. It does not. So you have to be even more aggressive and have a strategy to really stick to the price as it goes up and squeeze as much as you can before the snapback. And the fourth scenario is failure, meaning you enter a trade and there was not enough momentum, the trend reverses and like hits your stop basically before you could take any profit, partial profit, or trail your stop. All right, so starting with scenario number 1, that's going to be on Leonardo, ticker DRS. It's a trade from early 2024. The green line is my entry, the red line was my stop. So you can see we had a beautiful pattern there, beautiful trend. That was a new ticker from early end of 2022. Beautiful consolidation there. Extraction, breakout, take position there. And as you can see, right, this is building a beautiful steady staircase. And a great way to manage a steady uptrend such as this. I'm going to write it down there. Steady uptrend. A great way to manage a trade like that is to actually draw the steps of the staircase or boxes. And this was actually popularizing by Nicolas Darvas many decades ago. You can go and read about it. There's a book actually that he wrote and how he made a fortune basically trading stocks as he was traveling, and he was a dancer and so on. And he has an amazing way to actually monitor his trade and stick with it by, you know, drawing these boxes and giving them rooms. So you can draw these boxes such as this, right? And the box, the top of the box is basically the level at which if price close above, then the box gets validated and you're kind of safe to bring and trade your stop under that box somewhere there, right? The bottom of the box is going to be the bottom of the correction of the pause. So we had the beautiful box right there, got, you know, closed above right here on this one. We had another box there. This was albeit a bit small, but counts, closed above there. So price penetrated the box right there, right? So it depends if you're using physical stops or not. If you're using a physical stop, yeah, you're gonna be taken out right there, right? If you're using a mental stop, usually what I do is I would put a physical stop below the candle that crossed basically the bottom of my box, right? Which would be there, right? So there I'm giving room for the price to breathe. So we are building another steps here, and this one took longer. You see, it's longer, it's deeper. That's the other box. Confirm there. We're building another box there. Confirm there on the break. We are building another box right there, and this one never quite. It did work out eventually, right? But I mean, you can see how far you can go with these, right? This, you can see here we have a mental like level there. You see the price never came back close to the bottom of that box. That's a steady uptrend. And look how long we can stick with that trend, right? And every time I can bring my stop somewhere in that area. Look how long we can do that. So all these are validated boxes. There, 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 there. And that's when basically, and we've been in that trade for a long time, right? 2024. So we would have been taken out like somewhere there this year, end of the year. So that's a steady uptrend, and that's how you can use basically pauses and corrections to trail along the price. The second scenario that's going to be on gold from an opportunity from this summer on the 1st of September is going to be a climax run. So depending where you put your stop, right? I don't remember if my stop was there or there, but you can see how price there is really going up in a steep way, right? So this is not something that, and with gaps, you see gap, 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 gap. So you're not gonna let price drop back and snap like that, right? It's not steady like the previous example I showed you. This is really shooting up big time, right? Look, we only have weeks of upside there. So you need to have a way to trail that, and a great way to do that is actually you can also drop on a smaller time frame, on a daily. I use daily time frame for entry and fine-tuning breakouts in my analysis. So assuming that you validate at some point, and that's for you to decide that. I have a way to do it, but for you to decide that at some point, if you assume that, I mean, you can't trail your stop on the weekly time frame because you just have candlesticks stacking green, 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 green. So you can't trail your stop, right? There's no way to do it. So if you feel like you're on a climax run or you're worried about the snapback such as that, right? One way to do it is drop on a smaller time frame. You can drop on a daily time frame, for example. And you can use the same technique with the boxes, and you draw it on the daily time frame, such as this, right? And that allows you to really stick with a trend, right? Whether you want to place a hard physical stop under the box, or whether you want to, do it a bit like I was suggesting, use the candles that break through and then put a physical stop under. You see there, we would still have been in the trade. That candlestick broke through the bottom of our box. We place our physical stop a little bit below, giving it some room. We are forming another large step there. And I mean, we are forming another large step, but at the moment that, we are snapping back and so on, we are not in a climax run anymore, right? So I would go back to my weekly time frame and I can just resume my staircase, right? And that's it. And my physical stop was somewhere there. So it's perfect. So that's how I manage climax runs. Drop in a smaller time frame and apply the box strategy on that time frame. Now, how do we manage a super climax run? And sorry, I am still in a logarithmic scale, but if I go back to the previous trade call, actually it's more impressive like this. Yeah, now you can appreciate more the climax run, right? So moving back to a super climax run. I mean, look at this. This is like vertical, right? You can just feel like this is not going to last very long. So there, definitely we can't trade our stop on a weekly time frame. We don't have any correction or pause, right? This is even more aggressive than the gold trade I just showed you before. So if we drop on a daily time frame, we actually have the same issue. On a daily time frame, we barely have any, look there, we have no opportunity to trail. So what you can do is, if you feel like you're in a super climax run, which is basically a move so steep that, you know, it's gonna snap, and look at the snap, boom, boom, boom. It was like, you know, sometimes these happen and it just collapsed back down, and you look, even this, right, collapse. So you see that? That was my entry, early 2024, and the price literally went back down. Okay, recovered a little bit, but that was massive correction, massive, like the party is over basically. So how do we make sure we squeeze as much as we can from a super climax run? Well, one thing I like to use is trailing under each daily candle. If you feel like you're in a very steep climax run, drop into a smaller time frame, such as weekly, such as a daily, sorry, and then trail under each candlestick, and with a bit of room. And this allowed you to really stick with the trend. You give it a bit of room, stop, not touch, stop, not touch, gap, stop, not touch, and yeah, you have to, you know, there you get taken out. The high was there, we got taken out around 90 something, but you have to, I mean, you have to sacrifice a bit of profit, but look how high we exited, right? And that's still 150% not profit, depending on how much you risk, but that's still 150% that you squeezed out of this stock. That's like massive, right? That's a massive trade. So yeah, it's just beautiful, right? So that's the third basically with trend and scenario. And now if we move on to the fourth one, the fourth one is failure. So let me move back to my weekly time frame and look at this. We had a nice, steady, beautiful uptrend. We had a nice, clean little pattern there. We had a clean break, take position above the high. My stop was somewhere there, and the price just turned down. It just turned down. That trade did not work. You see, we retested the resistance, which became support. We tested it, we tried to move back up, didn't work, and we just, bam, headed straight for the stop. And this happened. This will happen sometimes. And that's okay, right? This is part of the trading plan. So, you know, whenever we approach my stop, either you have a physical stop or you can have a mental stop, where when the candlestick touches, go through your mental stop, you can put a physical stop a bit below to give it a last chance to go back up. Why? Because we place stops below like little corrections or bottoms, right? So there on this neat cup and handle, the stop was below the low of the handle. So whenever a candlestick touches it, there is always a chance that price bounces back, right, of that level. That's why we give a little bit extra wiggle room. And here it just didn't work. That's also part of my plan. I'm not hoping that this will recover and holding my trade and look at it just sinking into the depth of the abyss, right? I am not. If it touches my stop, or if I'm if my plan tells me you're out, then I'm out, and that's it. I move on and I wait for the next opportunities. Even, you know, this trade, look, it recovered and just like, yeah, it went hard and fast. But it is what it is. I don't care about the next part of that trade, right? That's it. That's where I take position. That's where I apply my trading plan. If I'm taken out there, I'm not taking another position after, unless I have a clean, basically my 6 ingredients for an explosive trade, which I didn't have, right? I didn't have an opportunity there to take another good position as per my rules. So I stay out. And that's it. These are the 4 scenarios that I use to trade with the trend. And in my opinion, yeah, every trader should account for that. I mean, this is super handy. This is what I use daily. Like that's it. There might be a bit finer rules and fine tunings and a bit more advanced stuff that I do use, but these are the basics basically. And I really encourage you to think about case scenarios that you've encountered in your trading and ask yourself, how do I account for these, right? I'm sure it happened to you that price exploded, and how did you account for that? Did you stay with it until like too late after it just snapped and you missed out on a lot of profit, or did you exit too early? So ask yourself this and my advice would be, try and design a plan which has these scenarios included, because you will face these if you're trading stocks or even crypto. You will face these, right? These are just characteristics of trends, right? The rate at which the trend is going to progress can fall into either of these scenarios, and you want to have a plan to account for that. I couldn't trade without it. I do not rely on judgment, right? There is some judgment, sure, when I'm going to assess the quality of a pattern, how is the contraction, how is the breakout, and so on. Sure, there is some judgment there. However, once I'm in the trade, there's no judgment. I have a set of rules which I follow, and it's mandatory for me. I can't trade without this, because I don't want to be depending on how much capital you have or how much risk you've taken on a trade. I don't want to be second guessing myself. Oh yeah, but maybe this is gonna go up, or maybe it's gonna correct and gonna come back. No, I don't want to leave any room to chance, luck, or guessing. I expose myself to asymmetrical, explosive opportunities with high potential of reward. Some of them are not gonna work, right? A small percentage are not gonna work at all, like this one that I showed you. This did not work at all. Some of them are gonna work a little bit, so I'm gonna have small gains, small losses. That's gonna be most of the trades. Actually, they're gonna be a little bit positive, and just a tiny fraction. Usually it's about 10%, right? So 1 out of 10 trades roughly is gonna deliver like the vast majority of the performance. If you go on my website, you'll see that's exactly what happened, right? Out of about 40 trades for the past almost 2 years, I think four or five were responsible for the entire performance, because the trades that pay are these kind of trades, right? They are also these kind of trades. These are the ones that pay, and that's why I need a plan to be ready to squeeze out and to follow along when these scenarios show up. So I hope that was helpful. If you have any question, feel free to reach out, and remember to subscribe, drop your mail on the website if you'd like to get posted on news and more content like that. Thanks for watching, and see you soon.